Hi everyone, and welcome to this afternoon's webinar. And I know I keep saying it, it's afternoon for us here in the UK. It may not be afternoon where you are, but wherever you are, thank you for coming along and taking some time out to spend it with myself, Anna, and my husband David, who is actually sitting behind me. We are going to be looking at what the markets are doing this afternoon, particularly the US markets. I think we're going to have a look at a bit of Forex and possibly some Forex futures as well. There's been a rather nice move on the British pound, but we're going to look at it maybe from the perspective of the futures market. And I think David's got a commodity up as well. But anyway, let's see where the market takes us today. But before we start, as always, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. As always, we are going to be looking at the charts through the prism of volume price analysis. What is volume price analysis? It is looking at the chart, looking at the price action, and how it interacts with the volume, how the volume interacts with the price action. In other words, is what you are seeing on the chart a genuine move? Is it a trap move? Or is it an anomaly? Because that will dictate to you and tell you where the price is likely to be going next. And really, that's all we want to know as either traders or investors. This is the book at Amazon, which explains how the methodology works and the concepts that make up the methodology. What is also accompanying the book is a book of worked examples, because it was one of the things that traders and investors asked for. They said, well, you know, that's the book explains the theory, as I said, the concept, but how do you see that applied to actual charts? So we put this book together, and there's over 200 examples there. Across all time frames, and this one is specifically for the indices, a lot of stocks and some commodities, and there is a Forex version as well. In fact, on my Twitter feed, I had a trader who trades the Indian market and said, you know, well, can you possibly look at the Indian market and stocks? And apologies, I didn't want to cough into the microphone. And yeah, I mean, it's not, you know, I'll look at any chart, but in reality, once you understand how VPA works, the ticker on the top left hand of the chart is almost irrelevant from a technical analysis point of view. Then, of course, you may have to look at fundamental news, and particularly with stocks, you have to look at all the some of the fundamental metrics that you would also need to be aware of. And certainly for US stocks, the one thing that you really have to be aware of if you day trade stocks is earnings season. I mean, we've had a classic one today on the pre-market. A retail company actually came up on my newsfeed. In pre-market, it soared almost 5%, and of course it's open gapped up, and etc. etc. So what I've also done on this one, I've actually pulled up a slide which we've used in the past, and it's actually as part of our Forex trading program, because it was brought back to my attention by one of our students, and it really kind of encapsulated what VPA is and what it does and where it sits, if you like, in your technical analysis approach. And when we were trying to explain this to you know, as I said, to traders and investors, what can we, you know, what's the easiest way to present it in a graphic form? And we had it in the form of a house, because VPA is, if you like, your foundational methodology. That's going away there. Oh, go back. Here we are. Right. David, can you see that black line across the bottom there? Can you see something across? Oh, you can't. Oh, brilliant. Sorry, I thought you could see something from my screen. And that methodology is it's made up of 5 elements. Obviously, there's volume, there's obviously price action, but it's candles, candle patterns, and support and resistance. And I really can't stress highly enough the importance of support and resistance. It's those 5 elements that make up the complete methodology. And this is what we call your primary tools. And we call them primary tools because volume and price are, if you like, leading indicators. They are in real time. You see everything in real time. Those are your primary tools. Then you can add on top of that, to help you with your analysis, what we call your secondary tools of choice. It doesn't mean they're second best, they are tools, and they have been developed to help you with trading, not only trading decisions, but also making sense of what you see on the chart, the structure of the chart. And these are the tools that are the most familiar, most traders are familiar with. We've got moving averages, Fibonacci, etc. We've got fractals, etc., etc. And overarching everything over the top is time. Time not only on the chart that you are looking at, but also in multiple time frames. Now, we've actually added a further layer on these. These tools here, as you can see, are fairly standard, and they're on most platforms. We have actually taken it one step further, in as much that we have developed specific tools to support the primary methodology, the foundational methodology, based on volume, but also particularly based on support and resistance, because that is a hugely important element of VPA. So I just wanted to highlight that today. It was in response to one of our traders who said he'd never really thought about it this way, and he just found it very, 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 very useful. It was part of one of the videos which explained how you really have to understand how different indicators and tools work. And what I'm going to do, I'm actually going to show you what I did. I took some screenshots earlier in the session, particularly on the NQ. It was something that I had been following. There'd been some really interesting bit of a price action on the NQ, and in fact I've actually got the 3-minute chart here. We've got the usual volatility nonsense that we see at the cash open of the market, and we can see the racking about that we get, the whipsawing, the volatility candles that are triggered by that. What we mean by that is the average true range of that candle. The spread of the candle is outside of the average true range of this candle for this particular time frame, and it's kind of the market. You have to wait for it to settle, and it looks like it's looking to want to break away from what we call the volume point of control. This is one of our specific indicators where we look at volume and price over time. In other words, it's building a congestion phase. The longer it stays in that congestion phase, then when you get a breakout, you will get a fairly strong breakout. And it's also premised on one of Richard Wyckoff's laws, which is second law of cause and effect. I suppose if you say, well, how did you come to the 5 elements of volume price analysis? It really does owe a huge debt of thanks and gratitude to the work of Richard Wyckoff, and in particular his 3 laws. So that is what I'm going to look at in more closely is the NQ. I think David's got the YM, which is the Dow Jones, but I just want to quickly whiz through what's been happening on the news side. Just hold on a second, I'll be with you in a second. Apologies, we just had a lot of noise in the background that I wanted to sort out. Okay, quick look. Those of you who use Forex Factory, you may have got this message today. There seems to be some issue with Forex Factory. I've tried refreshing it, and for some reason in our jurisdiction, it's not working. So I've got Financial Juice up. What's happening? I think most things have gone through today, but we have some. Where are we on the 20th? I think we've got some Fed speakers coming up. We've had US building permits. Let's have a look. I've actually brought up the economic calendar at investing.com. I've actually filtered it out. There's, you can put in as much data that you like for different countries, but essentially here we are. Yes, as I thought, we've got some Fed speakers coming up, but not till later. But everything seems to have more or less gone through the market. But the one thing that did actually upend the NQ earlier on, and this is where I've got to have a look at my, because this is the price action is too far back on the live chart. Let's have a look. Here we are. This was the first one. Yes, here we are. This was the NQ back at, where were we? About 11:30 this morning, as we can see here. There was a really nice move up away from the volume point of control. The volume under this candle, it was a very widespread up candle, but not a huge amount of volume. This was a big candle again, bigger than this one, but the volume was enormous basically, and in a way it was kind of anomalous. Then it had the wick to the top of the candle, and in fact with the volatility trigger, so we had a couple of warning signs that possibly this was just some kind of maybe spoof move to trap people going, going to go long, as it were, because you had this very, very strong move, as I said, move away from congestion. You can see here the NQ had not really done anything for the the previous hour and a half, certainly not in this time frame. So the volatility trigger, and we had a classic reaction in as much that the price action simply retreated into the spread of this candle. Now what that means is, going back to support and resistance, the top, the high and the low of the candle then also become important levels of S&R themselves. So in other words, if this is the reaction you get, in other words, you get a congestion within the spread of this candle, then you have to wait for a clean break either in one direction or the other. So that was quite interesting. Where are we next? Let's have a look. Where are we? I need A, that's the one. Let's just follow it through. Now what I then did, which I thought would be quite interesting, because I was sent I've sent a link a little while ago. It was just someone just said, look, I use VPA and what have you, because we do say with volume price analysis, you can add on, you can add on your standard indicators, and if you've got quantum indicators or other indicators, it's entirely up to you. The methodology is you adapt it, you blend it into whatever approach you want, and in particular moving averages, because moving averages are a very popular indicator for traders to use. And moving averages are great when you're in a trend. And this particular link was saying, well, this trader was using a moving average to either exit a trend or to see whether there was a reversal. And I said, yeah, that's fine. I can, he explained how it was being used, and I said, yeah, I agree with that. But actually, if you look at it, don't start with the moving average, but actually look at the price action and volume first, then the moving average is like more of a confirmation. It's not your first starting point. But the thing about moving average is this, is, as you can see here, when you have a congestion phase, this is what happens. They're really not designed for trading within a congestion. I mean, certainly when they're moving like this, they help to identify the congestion phase, but they really come into their own once the trend is underway. So once the trend is underway, what then? Well, as I said, this is what I try to explain. You then look at what is the price action, what is the corresponding volume underneath it. So as you can see here, we're in a very clear downtrend. We've got this big candle here, down here. If you remember, I said when we have a volatility candle and we have a congestion phase, we really have to wait for either a break of the low or a break of the high. Well, certainly with that candle there, it took it below the low of this candle, so it looked like it was going to break to the downside. When we have a very nice down candle with nice volume underneath it, then we have another candle here, and what's even more reassuring is that we had a very, very nice deep wick to the top of the candle and lots of volume there. So what's that telling you? That's going lower. Now what happens is you have an up candle and you think, oh goodness, is that coming to an end? What's happening? But look at the volume under that candle. It's very low, plus it has a wick to the top of the candle, so that's not going to go very far. This is just a pullback. We then have a further down candle, and which is great, and the volume is reasonable underneath it. But then it goes back into a congestion phase. So you had this little move after the break of the low of the volatility candle, and I actually wanted to track this because, as I said, it was really interesting from all sorts of perspectives. Now, the moving average I've actually got here is the 9 exponential, and the reason I use when I do have a moving average on the charts, some of my charts you'll see the moving average, some of you don't. I sometimes use the 200, the fractal adaptive for Forex. But the reason, if I am going to look at a moving average on the faster moving average, I will tend to use the 9, and the reason for the 9, it's one of the moving averages that is used by Ichimoku traders. I think it's the 9, the 26. What's the other one, David? I can't remember. It's 3. Maybe somebody can tell me, but the 9 is actually quite important. The 14, I think the 9, 14, and the 26, but don't quote me that. You can check it out yourself. But the 9 is definitely the one that is used. Now, what's interesting is here we are. We've moved on. This is the move lower, as we saw. We went straight into this congestion. We've got these support and resistance levels here. We've got strong resistance here. We've got the VPOC, and we've got support, and we're kind of moving sideways. And then suddenly, bang! You think, well, what on earth was all that about? And I will tell you what all that is about. It was because it came up on my Financial Juice news feed, but I think it's too far back. Essentially, we've had those of you who come along regularly, I've given you a laundry list of potential risk events that are going to upend these markets. We've had, I won't bore you with them now, but they include the election, they include obviously the virus, etc., etc. But one of them, lurking in the background, is the decision by Congress is to look at the very big tech companies. That's Facebook, Google, who else? Amazon comes under a sort of tech. They have become monopolistic, and they are going to bring them up for what do you call it? Antitrust, isn't it? Antitrust is basically when companies are too big and they've wiped out all their competition. It's not really capitalism as it's supposed to work. They're too big, and they've gobbled up all their competitors. Here we are. So it's Google, Facebook, and Apple as well. It's passed through Congress, and they're actually going to enact the laws that will force some of them to actually break up. Now, that was it's been in the background for some time, but it came up as is this definitely going to happen? But there is a but in this. It really depends on who gains control of the Senate. If the Democratic Party have a clean sweep, that's the presidency in both the Congress and the Senate, there is a very, very big likelihood that is going to happen. And obviously these big companies, they're worth a huge amount of money. People invest in them. If they're going to be forced to downsize, to sell off chunks of their company, maybe they're not going to be so profitable. So that is a big what was I going to say? It's something to watch for and listen out for, certainly as a consequence of the US election. So we have the volatility and all the uncertainty surrounding the election itself. We don't even know when we're going to get the result. Certainly, I doubt it will be the day of the actual election itself. And is it going to be contested? So you have that uncertainty. Then the next question is, once there is a result, what is that result? Is it, is it Trump and Democrat Congress and Senate? Is it a Biden has the Congress and Senate, or is it Biden that has Congress but doesn't have Senate? And that last one, if they don't gain perhaps the Senate, maybe that won't be quite so critical for these companies. But that was enough to upend the price action in the Nasdaq. And this other this was another piece of, it was an article I found. It's really explaining the consequences of what is likely to happen to these companies. So the presidential election has has huge implications, not only for the States, but for the rest of the world, but it also has implications for what is likely to happen in the stock market. So what do we have? We had a big sell-off in the candle. All the other candles, all the other volume bars were squashed because it was triggered this selling. Volatility candle, and as you can see here, but then some buying did come in. And just to finish off, where are we? I did sort of keep a nice sort of a record of these. Let's have a look. Where is it? D, there we are. That's it. And then we had some, as I said, back into the spread of the candle and to some congestion. And then if you notice the time, we are then moving on to the start of the open. That's the cash open. So it tends to sort of start to go into congestion and to pause while the market waits for the next, for the next open. That's D. I actually caught it on the Renko. That was the Renko chart, straight down there. That's another way. And what is the last one that I have? Let's have a look. What did I have? Yes, and in fact, we did get, that was the volatility candle. We had a bit of congestion. The VPOC actually came from there down to there. We had a little bit more of a sell-off, and then we had some buying coming in on this this hammer candle that we see here. In fact, we also had buying on the previous candle. Although that's a down candle, it's got quite a deep wick to the bottom of the candle. That's buying under there. It's stopping volume and it's buying at the same time. That is where the buying came in, and away it went to the VPOC, and it actually congested at the VPOC until the open. Where are we at the moment? There we are. Here we are. That's it. This is the buying that we saw here. Those two candles straight back into the VPOC, back into a congestion, waiting for the open. More racking about, and we've had another pull away on from the volume point of control, but straight back into this area. If you see here, we're back into the area where we were earlier on when we had that big down candle here. And what's happening to our moving average? Well, as you can see, it's going sideways, which is what we expect because we're in a congestion. Again, understanding the structure of the chart, what is the price action doing? What is the volume doing? We're in a congestion. How do we expect this indicator to behave? It's behaving exactly as we would expect. Then we have the pull away, and it looks like we're getting another reversal. Where's it going to go to? Well, it's probably going to go straight back down onto the volume point of control. And we know that we've got weakness here, we've got weakness here, we've got weakness here. And if that develops into a nice downtrend, what we want to see are falling prices, rising volume, and any reversal or attempt to rally will be on, if it's an attempt to rally, we'll know that because the volume won't be there to support the reversal. So that's what I wanted to say about the NQ and the price action that it's in at the moment. Looking at what we see at the on the Renko version, and we can see it's really quite messy. A lot of whipsawing. Yeah, it's in a range. It depends. If you're on the seconds chart, and I'm on the 3-minute chart, if you're on the minute chart or tick chart or Renko chart, possibly you can sneak some points either way. One way or the other. But if you're on the slightly slower charts, these time charts at the moment, I would say, given that it's moving back to the volume point of control, if you say that was a sort of a fake out from there, but there may have been enough in that move if you're on the faster time frames. Right, I'm going to leave it there on the NQ. If you've got any questions, just please put them into the chat box. I'll happily answer them for you, either on air or in the box itself. I'm going to pass over to David. I don't know what he's been looking at, so we'll see. All sorts of things. Oh, well, yeah, more VPA and lots of other things to look at as well.